So, you have been hearing about people talk about crypto, right? People talk about Bitcoin, Ethereum, XRP, staking, all of that, and yet lots of people are making money from it. Today, we're starting from zero. This is Crypto 101, where I'll be taking you from complete beginner to someone who will be confident in investing in crypto. And this series will take 20 episodes, and on this first one I'll be breaking down the truth about the crypto that nobody really tells beginners: what it actually is, why it exists, and how it's changing the money system we have always known. Alright, let's dive into the slides from the very beginning. This is the first episode of Crypto 101. Let's dive into it. Alright, here we are, as promised, Crypto 101 course, and this will be the first session. Please make sure to pause, feel free to pause, and if you're going to write notes or if you're going to actually check it in detail, and like, you can really take your time with it, because for those of you who is actually starting from zero, I might be going fast for you, so you can always take your time to pause and like stomach it in, so that you can make sure to understand everything before you continue listening. Okay, and like I said, make sure to ask me if you have any questions. All right, just like I have shown in my introduction video, these are the topics I'll be covering in the Crypto 101 course. So yeah, the first one being crypto basics. So today we'll talk about crypto, the blockchain, and a little bit we'll get into it a little bit, which explaining like how does it work, and a little bit of DeFi as well. So yeah, these are the topics, and like I said, crypto is a big world which every day we're growing, which includes me as well. So I might come up with some extra topics as time moves on. Okay. Okay. So what is crypto?
Cryptocurrency, money moving in the air.
Well, it's a digital representation of a value, as I have put it in a simple term. So let's say, imagine that for example, you have a physical cash, right, which you can touch and you can hold. And now imagine that same money, but now it lives inside your computer or phone. That's basically it. For example, you save your money in the bank, right? And you use nowadays, you pay online, and depending on which country you are in, there's a way that you can pay online nowadays. It's actually physical cash is really disappearing. So that's basically what crypto is. What makes it different than to the money you put in a bank? This one is there is no bank. Okay, it lives in something called blockchain. That is the bank equivalent for crypto, which keeps track of everything safely, which later on we will come to blockchain. But yeah, so cryptocurrency is just like it says, it's not a physical cash. It only exists in digital form, and it represents a value which you can own, transfer, or exchange, which is similar to money, but it's actually, in this case, is stored on a blockchain. It's simple as this. Okay. Another fact, the second one is not all cryptos are created equal. So cryptos is not only one thing. There are just like there are so many kind of currencies, there are so many kind of cryptocurrencies as well. And a crypto is actually more than a currency. This later on we will come into it. But for now, I just want you guys to know that there are so many kinds, with the main one being Bitcoin, which is also called digital gold. There's Ethereum with smart contracts. We will come later on in detail as well. But for now, just know that there are so many kinds, which includes Bitcoin, Ethereum, stablecoin, meme coins, and yeah, there are so many. Just like it says here, there are so many with serious projects backed by um, serious investors and stuff. But there are also like others which are fake ones, hypes. So there are That's why we really need to educate ourselves to actually know. We need to do a lot of background before we invest on any kind of crypto project. That's the main goal of this course in general, because I want you guys to know that you really need to do your due diligence before you invest in crypto. So the third one is the international transfer of value. So crypto, it allows money or value to move across borders, right? So yeah, and it's much faster than the traditional ones. Okay, that's the third one. So far, as you can see, it's just basic, straightforward. The last one is it's 24/7 trading. So when I started, actually, one of my reasons for me choosing to have interest on crypto is because I knew that I'm gonna have more time on Saturday and Sunday, and I know that the crypto market is 24/7. Which later on, though, I understood that actually it's not really smart to trade Saturday and Sunday even on crypto, because the volatility or the volume kind of decreases. Anyway, that's on my other series. But for now, you should know that actually it's true. It's 24/7 trading for crypto, unlike stock markets or those equities where they have limited hours. Crypto never sleep. So yeah, for those who really need constant access, it's actually perfect for you. Next one is many people use it for investment. Exactly. That's one of the main aim of this course as well. And I am also an investor, as I explained in my first video, I think. I mainly hold Ethereum. I'm an Ethereum enthusiast, so probably I will come up with a series only focused on Ethereum. But yeah, many people invest on crypto. So, like I said, I really want you to know at least the background of your crypto asset, your interest, before you dive into one crypto asset to invest in them. Okay, but yeah, people buy crypto to invest long term or to trade short term. Uses cases which includes to store a value like digital gold, or for yield farming, staking, DeFi. I know for beginners, these are some new terms here. We will come into them. That's why we will finish with digital finance in details. But for now, know that crypto is just like people invest into stocks, into gold, into index funds, or in general into other assets. Uh, People invest in cryptos as well, whether it's a short term or someone investing for really, really long term. Number six, it allows for peer-to-peer transfer of value. So, like I said, crypto, you don't need a bank. It's decentralized, right? I'm sure that's what you have heard. So you don't need a bank or a third party to send money. Blockchain, it lets two people exchange directly. We will come to blockchain in detail, but you can directly transfer money without any middleman. There is nothing. It's only blockchain making you allow allowing you to do this. Okay. Okay, next one. What is blockchain? I'm sure you've heard of it. Well, it's a distributed ledger of accounts, and you'll still be like, what does that mean? Elaborate. Let me try to make it simple. Imagine this, for example, when you're sending money to someone, normally on a bank, the bank will always save the transaction, right? So if you're sending like person A sending to person B, this data will be saved in the bank's database, right? Like it will be saved in there. So for crypto, the same thing happens as well. So, but in this case, like we said, there's no bank to keep this. So in crypto, that means blockchain does this. Okay, so in crypto, there's no bank. So who keeps these transactions? Or you can call it like a notebook. So it's a distributed ledger means everyone has this access. Okay, so think of blockchain like a big public notebook that lives in thousands of computers, where everyone can see what's written inside, but no one can change it. So see it as just this big public notebook that lives in each one of us computer all around inside, and everyone agrees on what's in there. Okay, so once something that's written on this notebook, you can never change it. So that's the simplest way of explaining blockchain. So all these cryptocurrencies and all the other things, which in detail later on we'll come to them, they actually run on this. As see the cryptocurrencies and all the others like the cars and the road is actually the blockchain. Okay. So yeah, uh, I think I've kind of did my best to make it as simple as possible. So that's it. That's it in short what blockchain is. Okay. Next one is unconnected participants run the network. Exactly like we said, the people who run the computers, they don't know each other, but yet we all agree that they all agree that the transaction through rules. This means there's no single company or bank controls it. Okay, and it allows also for crypto assets to be sent between accounts. So thanks to blockchain, this can happen, right? So without blockchain, you cannot be sending crypto from one wallet to another. And also decentralized blockchains, they can't be tampered with. So no one can go to the bank and change history or deleting a payment you made, right? So this makes it more secure than banks' private database. So this one is actually, once it's registered in the blockchain, it will forever be there. That's why nowadays, I forgot the country, but there are some countries even using the blockchain technology to actually use it for yeah, to store their vote results and some other things as well. So this actually is it's something that will be used and is being used for other sector of life as well, in the many different sectors. Okay, so for crypto, it is the main hub. Like I said, it's the main thing. Without it, it cannot exist. Okay, so just before we end this video, let's finish the last part, which is DeFi, decentralized finance. Well, I've tried to put it in short, but I will elaborate it here in the video. So it's finance powered by code or smart contracts on a blockchain, mainly on Ethereum. The rules are public and automatic, removing the need for trust in a central company. So what does that mean? Lots of new term for you guys here. Let me try to make it simple. Imagine now you want to borrow money. Like I'm talking about now our traditional life, not about crypto. If you want to borrow money, if you want to save money to earn a little bit of interest, normally you'll go to a bank, right? So that is more of trad finance, traditional finance. What about the crypto version? So what if you want to do so now you kind of understood the crypto world, right? Which you want to do all of that, but without a bank. So that is what it's called. DeFi, decentralized finance. Okay. So it's how does it work? By smart contracts. So what does that mean? That's also a new term. Smart contracts, see them as, so for this DeFi to work, you need smart contracts, because for the trad finance, for the traditional finance, it's actually lawyers and people in the bank doing this, right? Judging it and obviously coming up with the rules and stuff like that. But when it's for crypto, there should be, like we said, there is no one controlling it. So there should be a program. You can call it like a robot referee or something, which um, yeah, the rules are programmed. So if you put your assets in crypto and the rules are met, then it will automatically give you what you're supposed to get, and no one can cheat or stop it. So instead of signing papers on the TradFi, like we sign papers with lawyers or trusting a bank and stuff, in DeFi, it's the code itself keeping the promise. That's what we call smart contracts. And one which has this blockchain is Ethereum. One kind of, you see now Ethereum is not only crypto, so it's also actually something bigger than that. I will not explain to it now in detail, um, but our focus is now decentralized finance. So that's it in short, and I think that's the simplest way of explaining it. All right, since now you have understood DeFi, Let's see two concepts of DeFi and then end this video. Staking. Staking is actually not only a concept of DeFi, but some of the cryptocurrencies actually need this for them to work. Not all of them, okay? So staking is it's like putting your money in a high interest saving account, but to help a blockchain network work. So some of the cryptocurrencies, they actually use proof of stake, which means it needs people to lock up their coins. Let's say, for example, one of them is Ethereum, and it needs people to lock up their assets. It could be depending on the cryptocurrency. Now we don't need to go into detail. You're like showing, you're proving to the uh, blockchain that if you want to validate the transaction, you need to actually stake some amount of your asset and secure the network. And in rewards, you will be actually, getting some a little bit tiny share of that asset, that crypto. Okay, that will help secure the system, and the network will reward you with new coins. It's like similar to earning interest. So this, not all cryptocurrencies need that. Something like Bitcoin doesn't use proof of stake. That one's proof of work. I'm sure you have heard the term Bitcoin miners. But other cryptocurrencies like Ethereum, though, if you want to be actually a validator for Ethereum, you don't have to be a miner. You just have to have a lot of Ethereum. It has some conditions you need to meet, and once you have enough proof of stake, that you can actually validate transactions, and you will be earning a reward. Okay, so that's how I will explain it in detail, in simple ways, without getting into too much detail. Oh, actually, before I show you the yield farming, for example, one of the websites for if you want to be like, let's say, like, oh, I want to actually buy a crypto. Some people, instead of trading, they would choose to actually be a validator, and they would just by meet the specific conditions, let me put it that way. And if someone wants to do that, you can, as a crypto 101 person, maybe it might be so early to do this, or but at least you can check it. You can see at least one of the platforms is Aave. They have their own coin as well, but you can actually just check here and see, and you can actually solo study it, or probably at some point maybe I might make video on it. For now, I'm just investing on crypto, but not doing staking. So I might not know that much because I'm not doing it. But yeah, you can always learn. You can always see it. But one of the big platforms is Aave, and you can see the website, and you can go ahead and check it for yourself. All right, then the last one will be yield farming. This one is more of helping the DeFi, the decentralized finance, like you're helping for that to actually work. So it's essentially using multiple DeFi products together to try and maximize returns on your crypto holdings. It's like the advanced version of staking. So the goal is to earn the highest possible returns. So how can I explain this in simple terms? Think of yield farming like, let's say when you're putting money in a bank saving account, the bank uses your money to give loans to other people, right? I think you know that by now. In return, the bank will give you some small interest every month. So this is the equivalent version of the DeFi side. So in crypto, yield farming works kind of the same way, but instead of the bank now, for us, it's actually DeFi, which one of the platforms for that is Uniswap. You can go ahead and check it, but Aave also does that as well. So you deposit your crypto, and then they use it to let others trade or borrow for you. You will get high interest. But comparing to staking, this one is a little bit more advanced, and the risk is a little bit higher, but we won't get into technical terms now. But yeah, often you'll get paid by crypto tokens as well. So basically, you're acting like the bank, which you're earning rewards for letting your money work for others. So that's it mainly. So as it says here, the method is you typically deposit your crypto into a liquidity pool, which is like a pot of funds on a decentralized exchange like Uniswap. then this makes you a liquidity provider. You're actually giving your asset there, so that others can borrow it, and or yeah, do all this um, things that needs to be done, whether it's buying or selling on it, so that for you, you will earn fees from traders who swap the tokens using that pool. So yeah, so the Uniswap, one of them is Uniswap, and they have their own liquidity pool, which you can see it as the equivalent version of the bank's saving account. Yeah, but in device style. Okay. So like I explained here, you deposit crypto into a liquidity pool. Traders swap tokens using the pool, and you still own your share and can withdraw anytime. But instead of the tiny bank interest, well, you get in the traditional finance here, you earn fees directly from traders, and comparing to bank, this will be a high interest. Yeah, you'll get much better profit than the traditional finance. So for now, we will stop here. This is the first series being concluded. And if you have any questions, do let me know. I will see you in the second episode. Bye bye.